I'm Charlotte McLeod with investingnews.com, and here today with me is Jordan from Mining Stock Monkey. Thank you so much for being here. Great to have you back once again.
Glad to be back, Charlotte. Thanks for inviting me back on.
Really good to be speaking with you. And I think today where it makes sense to start is with gold. I remember last time we spoke, you were saying you could kind of see both sides of the argument when it came to the price. In other words, so many macro factors that could push it higher, but we're also in a gold bull market that was getting a little bit extended. So I wonder if I can get your updated thoughts on the outlook for gold. We did see the price go below 4,000 last week. So how are you feeling right now?
Yeah, I feel great, but I love buying opportunities. So, I mean, when the price of gold or any other metal or stock is at an all-time high, I'm often tentative or like hesitant to buy. But I like to buy on pullbacks, and we're at about 4,000 today, and this is a pullback from a high of about 5,500. So what is that? I think that's over a 25% pullback if the math in my head is correct. Now, uh, maybe it's 2027. I'm not sure of the exact math, but that's very normal for a bull market to have a 25% pullback or even more. So in previous bull markets, since there's been a few bull markets since they took the price fix of gold away in our early 1970s, and during those bull markets, we've seen multiple pullbacks of 25%, a pullback of 35%, even a pullback of 49% in the middle of a gold bull market. So what would 49% be today if that were repeated? That would be about 2250, no, 2500, 25, no, I'm sorry. Man, I've been living out of hotels for a few weeks, and I don't know if you can tell, but I have like dozens of people walking by in this busy hotel right now, and apparently I can't do math in my head because no, it would be about 2750 would be a 49% pullback from the highs in this bull market. So we're still quite a ways away from what we have seen in the past. Now, I'm I'm buying a lot of gold stocks right now. I think this is a great buying opportunity, and like you mentioned, I'm bullish over the longer term for lots of macro factors. I think the dollar continues to get devalued over the longer term, and when the dollar gets devalued, when its purchasing power goes down, and every dollar you have buys less stuff, the price of gold should go up along with that devaluation. Now, of course, there will be ups and downs along the way, and it's not going to be a straight line with the devaluation of the dollar. But as the purchasing power goes down, the value of gold goes up. But also, you have to consider that we've had a historic bull market in gold over the past 2 years or so. It, it was just at the beginning of 2024, that's 2.5 years ago, that gold was trading pretty steadily at about $2,000 an ounce. And it almost tripled from that. And now it's since pulled back, and it's about a double from there. So, I mean, we're still significantly higher than we were just a 2.5 years ago. But overall, I like this as a buying opportunity, and I was hesitant to buy when it was at 5,000, 5,500, but now I like it here.
Okay, I think that's great context for everybody on how gold can behave even in a bull market. And we'll get into a little bit more of your strategy. Before we go there, I see a lot of people in our audience who are also seeing this as a buying opportunity, but they're not sure if we've reached the bottom for gold. So I wonder, for you, when you look at this, how do you come to a point when you say, all right, this is a good enough point for me to get in? How do you think about that in your head?
I Well, like I mentioned in the previous answer, I don't like to buy at highs. I know lots of people get excited at highs, and they think it's going to keep going higher. But when everybody around you thinks it's going to keep going higher, that's a pretty good sign that maybe you're approaching a time when there's going to be some sort of pullback. And on the other hand, when lots of people are bearish, when sentiment is really bad, when the multiples that publicly traded companies in the gold sector are getting in the stock market, well, then when the multiples shrink, that's a pretty good sign that sentiment is worse. And also, you can see in the comments section of videos, you can see the sentiment there, whether people think that it's going to keep going down or not. And I mean, when you see a lot of people commenting saying this market is over, this gold bull market is done, it's going to keep going lower. That I'm looking at that as a buying opportunity. So basically, the opposite of what people are saying in the comments. And if if I see sentiment worsening by seeing multiples shrink, I like buying at lower prices. So that's another good sign. Now, could it keep going lower? Yeah, absolutely. And historically, I have been one to start buying aggressively before reaching the bottom. And I typically, when I like something, I typically buy all the way down. Like it goes down, I buy more. It goes down, I keep buying. Uh, now and then I never time it perfectly, but usually I get some purchases near the bottom, and then that doing it that way allows me to get pretty good prices most of the time.
Yeah, I think that's really good to talk about that idea of scaling into a stock. So anything further that you can say there so investors understand that strategy of not buying all at once and not trying to hit exact price levels?
Yeah, it's not that I'm opposed to buying all at once. Like, for example, uh, if I came into a big lump sum of money today, I would I would deploy most of it. Most, if not all of it, right now, instead of trying to buy a little bit at a time, because I see outstanding prices. Now, if I don't see outstanding prices, then maybe I buy a little bit. Maybe if I like it, but I don't love it, I buy a little bit of stock today. Now, I'm different from somebody who's, let's say, a retiree who doesn't have an income, because I I have money coming in every week, right? So naturally, from my income, because I'm still working, I will have some sort of like dollar cost averaging, right? But if I were a retiree and I didn't have an income, and I just had a big sum of money that I was looking to deploy, I would not dollar cost average here. I would bet big here on some of my favorite stocks. I'd be very selective, but yes, I would bet big.
Yes, of course. Very important to consider each person's individual circumstances, but I think that helps a lot in understanding what you're doing. And maybe, so right now you're seeing this as a buying opportunity. Can you talk a little bit about what you have been buying? I don't know, you can mention specific names if you want, or you can also just talk about generally how you're deploying capital right now.
Yeah, I really like the gold and silver royalty companies. Some copper royalty companies too, or like a combination of precious metals and copper. For example, Elemental Royalty I thought has been a pretty good buying opportunity. When it's a very volatile stock, but when it's around $15 a share, I really like Elemental. I've been betting heavily on Royal Gold. Now, I was betting heavily on Royal. I mentioned earlier how I'll buy on the way down and I'll keep buying. Now, I've been betting heavily on Royal Gold, but I was doing that 6 months ago too, because I saw great value in it then when the price was a lot higher than it is today. So I continue to buy a lot of that stock. Now I think that eventually turns, because look, it's a lot easier to predict the direction a stock is going to go, but rather than the timing of when it's going to go there. So like uh, with Royal Gold, I see a lot of value in the stock. I think it's significantly undervalued, but I don't know when it's going to get closer to fair value. I just know that it's going to happen eventually, or at least I'm highly, highly confident that it's going to happen eventually. So I don't really care if it happens today or in a couple of years. because I mean, actually, I'd prefer that it take longer because then I have more of an opportunity to buy more shares because I've been trying to buy as many shares as I can, and I'm glad that we have the lower prices today because it allows me to keep accumulating.
I think that that makes a lot of sense and good to hear what you're looking at right now in terms of the stocks. And I remember last time we spoke a lot about the importance of margins for companies and also protecting your downside as an investor. So it does make sense to have that royalty streaming focus. I wonder, is there any circumstance where you would consider moving down the food chain, looking at the smaller companies, even the juniors, or is that not for you?
No, I would consider it, and I am considering it. Uh, However, it's all about risk reward, and if the reward is big enough for that higher risk, then yeah, I will definitely take it. But the market goes through cycles where sometimes it's really undervaluing those juniors or those mid tiers, and it's definitely worth taking on that risk. And at other times, if those get more of a premium, or not necessarily a premium, but a premium to where they were at, right? And then at certain times, the royalty stocks get really expensive. Like it was probably maybe 3 or 4 years ago where the major royalty and streaming companies were trading at 3 times NAV, or how the analysts calculate the NAV of those companies. And when it gets to that, I mean, I wouldn't be buying there because that seems expensive to me. But right now we're not there, and you can buy these really high quality companies for a fair price. And the longer I've been doing this, the more I get into, like, when I have the opportunity to buy higher quality, I tend to do it. Uh, Now, I think it's generally a better idea to buy the higher quality company when it's trading at a fair price. You know, when Warren Buffett starting investing, he was looking for what he called cigar butts. So with these cigar butts, they often had more cash on hand than the entire company was valued at in the market. And he would find these stocks and he would buy a whole bunch of shares of them. But eventually, with the help of Charlie Munger, he actually stopped doing that, and he he now he was very successful with that, and he did make quite a bit of money. And Berkshire Hathaway was actually one of these cigar butts, and it was a failed investment for him. Berkshire Hathaway did not work out, and then he ended up using it as a holding company. So he turned it from a textiles producer into a holding company, an insurance company. But so with the help of Charlie Munger, Warren Buffett started realizing that, hey, it's better that I buy a great company at a fair price than a fair company at a great price. And that's how he ended up making most of his money over his career, is buying great companies at a reasonably good price.
Makes a lot of sense, and I think it's good to look back at those lessons from the past. I wonder if we can talk about the gold miners as well. We're getting to the end of the second quarter, which means we're going to pretty soon be getting the latest round of quarterly results. I'm wondering what companies and what numbers will you be looking at to gauge the health of the gold sector and the miners right now?
Well, I mean, I'm not looking at any companies in particular, other than the ones that I own. But I mean, with the miners, I really want to see what their costs are doing. We basically know how much revenue they're going to bring in, because you basically know how many ounces they're going to produce, and then the approximate average gold price during the quarter. So that's pretty easy to gauge. But what we don't know is costs, and what kind of inflationary pressures are we seeing? And as the gold price is retreating, do costs continue to go up? Now, some of their costs will go down because, for example, just about every gold mine has some sort of royalty component on it. So as the gold price goes up, the royalties the companies pay go up too. So, for example, if a mine has a 10% royalty on it, and this could be a combination of privately held royalties or a government royalty, but a 10% royalty, I mean, and the gold price goes down $1,000, their cost just went down $1,000, or I mean $100, 10% of 1,000. So, and that has the opposite effect when the gold price is going up. So, royalties are something that automatically increase the cost as the gold price goes up, and that will reverse. But what will happen to the cost of their consumables? Like the oil price was pretty high for much of this quarter, and those that weren't hedged and use a lot of diesel fuel, well, they'll probably see some cost pressures with oil now. Now that has changed, so that has changed very rapidly over the last few weeks, and the oil price has plummeted. So the energy costs for these miners will likely be a lot lower in quarter three, unless something else happens with Iran. Which, I mean, this could be totally different tomorrow, and we could see Trump say something, and the oil price spike back up to 100 tomorrow. Who knows? Who knows what's going to happen? But yeah, so uh, not so much focused on their revenue, because that's very easy. That's very easy to know. But what are their costs doing? That's the main thing I'm looking at there.
Yeah, I think that will be very revealing. And you're right. It is quite difficult to know what's going to happen. We've had such ups and downs in the oil prices over the last quarter or so. I wonder, so that's due to the impact of the Iran war. If we look more broadly, are there any other ways that the conflict has impacted your investing strategy during this time? Anything that has been at the forefront for you?
Uh, yeah, I mean, well, it's made it difficult to value the oil companies, because when I'm trying to build a valuation model for an oil producer, and oil's trading at $100 a barrel, $110 a barrel, but I don't trust that it's going to stay there. It's hard to know what oil price to use. So, I mean, when the WTI crude oil price is at $100 a barrel, I was not using that. I was building my models using $70 oil or $80 oil, because I I thought that this conflict would end. I thought the Strait of Hormuz would open back up. I didn't know when. Again, like, uh, it's it's one of those things where it's a lot easier to know the direction than the timing. So I thought the direction was down, but I didn't know how long it would take. So uh, I would to build my valuation models. I was using $70 or $80 of oil, which makes the company look a lot less valuable than if you use $100 oil. But I think that was a prudent move. So, but I mean, how the conflict has affected my investment. I mean, it really hasn't, except for it made it a lot more difficult to know what oil price to use.
Right. I remember when we talked before, you were saying that for oil and gas, you were kind of in an education phase looking at this sector. So I guess that's part of that. Were you able to make any moves into this sector, or are you setting it aside for the moment until things get a little bit calmer?
I'm not necessarily setting it aside, but I haven't made any new moves either. Now, I was hoping, like, I thought the oil price would come down like it has, and it has drastically recently. But actually, the oil stocks didn't drop as much as I was hoping or would have thought, with a big decline in the oil price. So I think it's pretty clear that other investors also were not pricing in $100 oil or anywhere close to that for the longer term, because I mean the oil price dropped by 30%, and the many of the stocks came down 10%. So uh, not not nearly as much as I would have expected or might have hoped.
Speaking about the war, I wanted to ask you about copper as well, because I remember you said you're very bullish on copper, but have concerns about recession. So I think definitely recession concerns have increased since we last talked. How worried about it are you at a US level or even at a global level? How are you looking at that possibility right now?
And yeah, I like copper a lot, but I mean, copper gets killed in a recession, and it's it's been almost 20 years since we had the last real recession. So I'm talking like 2008, 2009 was the last time we had a real recession. I'm not counting 2020 because that was a government induced recession because the government forced people to stay home and they forced people not to work. And of course, the economy will go into recession if the government doesn't allow people to work because uh, a recession is an economy shrinking. So, of course, an economy is going to shrink if people have to stay home because you can't produce anything, right? So, Uh, the last real recession was about 2009, so we're talking 17 years ago, and historically the economy enters into a recession between about every 8 to 12 years or so. So it's well past what's normal. So I definitely fear that a recession is coming, or well, not fear, but maybe that's the wrong word to use. But I suspect that a recession is coming, and now you have the new Fed chairman who is talking a big game about raising rates and potentially shrinking the balance sheet. And I mean that would take away the punch bowl. That would make it even more difficult for the already overextended consumer. I don't know how the government would handle higher rates either because they have way more debt now than they have historically, and they're like in the U.S. government in particular, their debt to GDP ratio is extraordinarily high. Like in the 1970s was a decade of really strong inflation, and towards the end of it, Paul Volcker, as Fed chairman, raised rates extremely aggressively, far more aggressively than we've seen anything like it in recent years. And it went well into the double digits. I think it went to about interest rates went to about 18%. And back then, yeah, that was really difficult for people. It caused a lot of problems, and there were a lot of people in society who were struggling, but they were able to get through it then. And the government debt to GDP at that time for the U.S. was about 30%. Now today it's 120%, and that doesn't even include unfunded liabilities. And if we're going to do honest accounting, you have to include those. And when including the unfunded Social Security and Medicare and things like that in the US, well, then you're looking at a debt to GDP ratio of about 400%. And how are they going to raise rates aggressively with that kind of debt to GDP? I don't think they can. Now, they'll probably try to do some quarter point rate hikes, but I don't think that's enough to kill inflation. And I think if they want to kill inflation, they have to raise rates by 3% at one meeting, and then 2%, another 2% at the next meeting, right? And get rates into the 10% range, the 12%, the 15% range. And I really don't think they can. And I think that if they try to raise rates aggressively, or if they try to shrink the balance sheet aggressively, something's going to break and they're going to reverse course. I mean, we we've seen this quite a few times in the past 10 or 15 years where the Fed talks a big game and they talk about raising rates aggressively and they talk about shrinking the balance sheet. And then they start to do it. They start to do a little bit of it. Then something breaks, whether it's the housing market or the bond market or something else. And then there's a lot of pressure on them to reverse course. And then every time they have, and they've reversed course aggressively, and then they expand the balance sheet once again, and they lower rates, and they bring rates back down to zero or something like that. And and then what the Fed was talking about doesn't seem to last very long. So yeah, I think that will happen. But yeah, in terms of copper, I would like to wait until we see some sort of recession to invest in most copper stocks. I'm buying some copper stocks, like I mentioned, Elemental Royalty earlier, and they do have a pretty big copper royalty portfolio. But that's a much safer way to own copper because they have 100% margins on most of their copper assets. So if copper goes from $6 to, let's say, $4 per pound, they're and they have 100% margins, yeah, they're going to lose 33% of their copper revenue. But if you're buying a copper producer today at $6 a pound copper and it goes down to $4 a pound copper, I mean, they might lose all of their margins. And then they go from making a lot of money to making absolutely no money at all. And then that stock is going to get crushed. And that would be a great buying opportunity for some of the big copper producers, like, for example, Freeport or Southern Copper or Ivanhoe Mines.
Great explanation there. And I know you mentioned one copper royalty company. I'm not as familiar with copper royalties as I am with gold and silver. Are there other companies out there in the copper royalty space that you would mention that people should potentially take a look at?
Uh, I like Altius Minerals, but they're more of a diversified royalty company, and they do have a few copper assets. They have well, yeah, they have four different copper assets that are either in production or some stage of development. So that's one, but I mean, they have maybe 20% of their entire portfolio in copper. So it's not significant. And Elemental is maybe a third copper, maybe a little bit more than that. So yeah, there's there's not many options that I know about that are like pure play copper royalty companies.
Fair enough. Thanks for going into that as well. And on the note of copper, I'm wondering, so if we look further down the food chain once again at the explorers and developers, is there a case for getting into those companies right now, or is it really not the time? Just because I know copper has a good long-term picture. It sounds like right now it's a little bit uncertain, and the timelines are just so long for those companies to maybe get their assets into production. So any thoughts on that?
Oh yeah, I mean I think there's some great buys in the copper explorers right now. I mean, you have to be willing to take a lot of risk though, and you have to follow the companies super closely. For example, I like Hercules Metals a lot, and the stock price is pretty weak. They're exploring for copper in Idaho in the western U.S. and they've already found a significant deposit, and it looks like they're finding additional deposits. And so yeah, that's one that's advancing a project, but it's very early stage. It's exploration, so it's incredibly risky. But I do think it's trading at a very fair price right now.
Well, really good information. And I'm curious, are there any other areas of focus for you right now that you would want to highlight for investors?
Uh, not too long ago, I was nervous about investing in silver because we had a huge spike in the price of silver up to something like 100, $125 an ounce. And but now it's come back down to earth. It's last I saw $58 an ounce or something. So right now I'm looking for silver opportunities. And this was another one of those examples of I was doing interviews saying that I was bearish silver, and there the comment sections were filled with people saying that this wasn't going to age well, that I'm an idiot, that the silver price was going to keep going up, it was going to the moon, and I that was another example of when I thought that, hey, I'm even more confident that we're going to see a weaker silver price because of the sentiment I'm seeing and all the bullishness around. But now that it's fallen by half, I'm looking for silver investments now.
Okay, well let's talk a little bit more about that because silver is really interesting when it comes to looking at the companies just because there's so few that are pure play silver. So is that what you're looking for or what do you want to see when you're looking for silver companies right now?
Yeah, pure play silver companies is tough, and also what's tough is to find silver companies that actually make money. If you some very popular silver producers, if you go look back at their cash flow per share over 20 years, they lose money most of those years, and today they're valued at $10 billion. Now, if you had the opportunity to buy a company that lost money most years, and those years that it did make money, well, it made less than it lost the previous year. How much would you pay for that company? Probably not very much. In fact, probably nothing at all. Uh, and you have companies like that are valued at $10 billion. So it's hard to find a good silver investment. I appreciate something like Wheaton Precious Metals, who has a lot of silver exposure, but they do it in streams. So basically, they're guaranteed 80% margins on every ounce of silver that they get. Uh, but when it comes to silver producers, silver developers, you generally have to take quite a bit of a political risk because to get a quality silver deposit, you usually have to go to like Russia or Mexico or Peru. So there's not a lot of countries around the world that have a lot of great silver deposits, and it's mostly concentrated in those three. So where are you going to go? Like Peru changes their president every year. It seems like Mexico's not great. They had a they had a socialist in power and they just elected another socialist, and the last one hated mining and this one hates mining, and uh, there's there's a lot of people who are anti-mining in Mexico too, and they they do a lot to try to stop mining projects from getting into production. And I mean, there are parts of Mexico that are better. The northern states tend to be better than the southern states. So, for example, a project in Sonora, for example, is probably a lot more likely to actually go into production than a project in Oaxaca or a project in Guerrero. Uh, so that's something to consider. But yeah, you generally have to take quite a bit of political risk if you're going to go for a silver producer or a silver developer.
I think that's very true. And I know in Mexico early or this year, the Vizsla Silver incident kind of cast a shadow over the sector as well. So for you, of those three jurisdictions, which one would you prefer? Where would you focus? Is it those northern Mexico areas that you're looking at?
Uh, I I'm not comfortable with any of them, especially considering the prices you have to pay. Uh, I I don't think the prices are low enough to make it worth the risk yet. Now, at some point, that probably changes, but I'm not there yet.
Well, let's talk about the silver price because I think the main questions that I'm seeing from our audience and just in general about the silver price is can it go below 50 or is that the new floor for silver? And then on the flip side, can we get back past that $100 triple digit level that everyone was so excited about earlier this year? So what are your thoughts on silver? It's such an interesting metal with the precious side and then the industrial side. I know we've talked about some of the economic challenges.
Yeah, this is another one of those things where I wouldn't be surprised to see either of those options. I would not be surprised at all to see it go above 100, and nor would I be surprised to see it go below 50. I don't think 50 is the bottom. Uh, I think it could go a lot lower than 50. Uh, but yeah, it's hard to find quality silver deposits, and most most of the silver that's mined is mined as a byproduct of copper mines, of lead and zinc mines, for example, of gold mines. So these mining companies, they're not building these mines and they're not expanding these mines because of the revenue they're going to receive from silver. So silver is unique in that a huge spike in the silver price doesn't necessarily create much more supply in terms of mine supply. Now, a big spike in the silver price creates a huge spike in supply when it comes to recycled silver, but not for mined silver. Uh, and also, it creates a spike in supply from from sales of investors and savers in silver. For example, you have a billion or a billion and a half people in throughout rural Asia where silver is their bank account. And when the price of silver goes from $25 an ounce to $125 an ounce, how many people who are saving in silver are going to sell some of that silver to buy some more land, to buy a tractor, to buy some luxury they weren't able to afford before, to uh, to have some funds to move to the city where there's more opportunities for them. So that can create a lot of selling pressure in the case of a big price spike. And I was talking about this when the price spiked up to 100 or $125 an ounce, and I thought there was going to be a tremendous amount of selling coming from these these rural East Asians. And when you have a billion or a billion and a half people who save in silver, even if each person only sells an ounce or a couple ounces of silver, that you're talking about 2 to 4 years of mining of mine supply coming to market. So that could be a lot of selling pressure that comes from that. Um, but yeah, as for what I think of the silver market, I don't have much of a prediction of which direction it's going to go. But I do like silver. It's hard to find. Um, it's it's pretty hard to get new quality deposits into production. So I think there's going to be quite uh, a bit of supply constraint there, and also a lot of the silver supply comes from copper mines, and the world has underinvested in copper discovery for a long time. And it is extremely difficult to get big copper mines into production, and it takes a very, very long time with the immense amount of drilling that needs to be done, and it often goes through several market cycles, bull and bear cycles of copper, and then there's typically very long permitting timelines, and then once it's shovel ready and they make the final investment decision, it's usually 5 years before they even pour first copper there. So it can take a long time for significant supplies of new silver to come online, and then you have lots of increasing silver demand too. Um, Lots of new solar farms being built. Those use those use quite a bit of silver. Quite a bit of silver is used in electronics and weapons. So there's a lot of silver that's being used and is often hard to recycle too. So from a demand side, I like silver as well. Just in the short term, I have no idea where the price is going. Over the long term, I think the price of silver goes higher.
Absolutely makes sense. All right. Well, thank you so much for covering what's going on in silver, your approach there. I think we'll start to wrap it up. But before we do, are there any final thoughts that you would leave investors with right now? I think it's shaping up to be an interesting summer, lots for people to be thinking about right now.
Um, yeah, yeah. There's there's been a lot of big changes. The final thought I would leave people with is remember rule number one of investing is buy low, sell high. This should be the first thing you ever learn as a kid about investing. So when you see lower prices, that you should be thinking buy low, because to buy low and sell high, you have to buy when sentiment is bad, when everybody around you is saying that the prices are only going to keep going lower. So when you see much lower prices, it's usually a pretty good time to buy.
Yeah, it's so basic, but so important. So I think that's a really nice note to wrap up on. Thank you so much for coming on to talk about what's going on in the markets, your strategy, and thank you for doing it from your busy location. I appreciate it.
Yeah, sorry if I was super distracted during this. I know it's not the ideal interview location or setup, but I
No,
appreciate you working with me.
you're good. You're good. This was great. And once again, I'm Charlotte McLeod with investingnews.com, and this is Jordan with Mining Stock Monkey.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.